Welcome to the Money Watch Show. It's Saturday, April 12th. And wow, has it been a crazy couple of weeks. Catch your breath, gang. I keep thinking about that Betty Davis line, which I know all of you who are so young will not get this, but you can look it up on the YouTube, kids. Betty Davis and All About Eve. Buckle up. It's going to be a bumpy night. And it is a bumpy ride out there. It's been crazy. So let me bring in my co-host, Mark Talercio. Mark, right on back to the old COVID days with these market swings, right?
Yeah, I haven't been on a roller coaster in a while, but it was fun. It was fun.
In case you don't get to Coney Island anytime soon or Six Flags. Does Six Flags still operate? I don't even know. So it's crazy. Okay. So here's what we wanted to do for this show today. Mark and I are both certified financial planners, and we do try to take the mystery out of your financial life. But something really distinct happened this week, okay? And we'll go back in the past, let's even just call it like 10 days. From the day after the market closed, Wednesday, I guess that was April 2nd, was at the Rose Garden announcement where President Trump announced these massive tariffs, not just that blanket 10%, but then these massive retaliatory tariffs on a host of different countries. And then Thursday, Friday, we had our nice hand-holding, remember last weekend. And then the markets started this past week off with some gains, then losses. And then lo and behold, on Wednesday, April 9th, we had the president blinking. We went from the Trump slump to the Trump bump. Because what the president did was said, you know what, those extra high tariffs on all those countries, we're going to put a 90-day pause. We're going to make it 10%. It's basically 10% for everybody as a tariff and then 125% for China. And that's what it's going to be. And stocks went up. Mark, I have the numbers for you. Are you ready for these numbers? They are astounding, truly. Because, I mean, it just doesn't happen every day. It's insane. It really was insane. We had these moves of, let's just call it anywhere between 8 and 12%. The Dow was up just under 8%. The S&P was up 9.5%. The NASDAQ was up 12%. So I don't know what my message is here. Okay, here's what I want my message to be. My message is this is a unique moment to really watch how markets move when things get chaotic. This is not normal, gang. We don't have the stock market lose 12% of its value over the course of 3 or 4 trading sessions. So if you're a new investor and you think this is dizzying and awful, you're right, it is. If you're a longer term investor, one of the things that the volatility always does pound into us is that we shouldn't do anything because you never going to know when to get in or out. I'm a little worried, Mark, because I think some of the newer investors think this is almost like gamification. It's not a game. This is real, and it can be very scary. So it's always a game on the way up, but on the way down, it's awfully different. So what we're going to do now is we did something kind of fun. It was almost like CBS News borrowed the format that we do here at Money Watch, and that is I'm going to play a clip from a special report that I did for CBS News with the anchor Lindsay Ryder. And what we did was we actually asked people to pose questions to us that we would answer while we were on the air. So it was kind of like live TV meets podcasting. So here's the interview and me answering questions with Lindsay Ryder, our anchor from CBS News.
If you were watching the Dow, I mean, immediately when this announcement came up, there was a big spike of green, and it was the single biggest day that we have had for a rally since 2020. They mentioned the 10%, Jill. I mean, imagine if we had had no tariffs. The 10% would have been pretty significant. This was more like, oh, thank God it's not as bad as it was.
Yeah, it's such a relief to know something that is not so extreme. Coming into this period, when we were getting ready for this Rose Garden announcement, most of the analysts and strategists and economists, they had kind of penciled in this 10%. They knew the autos would be a little more. They were surprised about that Canada and Mexico were first. But I think that the sentiment was we're getting 10%. And if that had been announced, if this deal that's right now, the pause deal, were announced on that day, I think we would have gotten actually a relief rally to have the news out. And if it were not a pause, but an actual, this is what the level is, and we'll see where we go next, I do think that the markets would have reacted pretty well to that. It's very difficult to imagine that you put the entire world through this whole process over the course of 5 or 6 days, perhaps unnecessarily.
What I'm wondering, though, is if these deals happen and the negotiations happen and it becomes the U.S. and the world against China, I mean, their economy is in a tough spot. I mean, does that become a problem for them?
Well, I mean, I think they're in a tough spot, but you see that they've been courting some of their former enemies. And I think that's been fascinating.
Give us some examples.
We're going to sit down and have a discussion with Korea. And I thought that was just a shocking moment where you could see the Chinese saying, listen, he's going to be tough on you. President Trump's going to be tough on you. We're here for you. India, I know you're friends with Trump, but we got a lot of stuff here. We'll bring cars to you. Don't worry about it. I think there's a real risk when you're creating these kinds of massive tariffs and policy shifts. There's a risk that you push your friends into the arms of your enemy. And that's the thing that I think that we have to keep an eye on. You know, it's not that long ago where Germany was buying a lot of energy from Russia. And that all had to get undone very quickly with the war in Ukraine. I think that there are people who are watching this geopolitically and economically and seeing, where are the chips going to fall here? We're not sure.
Do you want to get to another viewer question? Why is it okay for other countries to charge tariffs, but not okay for the U.S. to do the same? The president's been saying the global trade right now is completely unfair. He's trying to level the playing field.
Oh, I mean, look, there is something to be said if there is an unfair playing field on certain products. And I think that we would feel a little bit more secure in the idea of we're leveling the playing field if we didn't have such a blunt on a piece of cardboard rollout of a plan. If they said, look, what we did is, and I understand this is what they did, that there were a lot of economists that went from the government and went and talked to companies and said, where's the pressure point? How can you sell through? Where are you feeling the pain? And then you come up with a more nuanced, like you take your scalpel out. You don't take this hatchet to the entire trade regime that's been working, not perfectly, but pretty well for 80 years or so.
So another question that we have is, how do these tariffs impact everyday consumers, especially when it comes to something we've all seen, prices at the grocery store or the hardware store? What's the long-term outlook? Are these tariffs likely to strengthen the U.S. economy or just cause temporary disruption? Maybe part of me feels like that last latter, as time will tell. But
yeah, and also it depends what the tariffs are, how long they stay in place. Where you're going to see the first price increases is with perishables, right? So just think of it this way. There's a bunch of stuff that's on the racks of stores all over the United States. A lot of that stuff has been imported. And once that stuff is sold, we're going to have to see whether these companies are going to restock their shelves. When they restock their shelves, what's going to happen? There's going to be a tariff due, and Walmart might say, okay, we're going to import that. We're going to bring that on our shelves, and now we're going to pass along that price increase to you, the consumer. The longer tail of the effect of the price increases would be with places that have a lot of inventory. So if people go out and buy a ton of cars in the next 3 months and they run out of inventory fast, then you're going to see prices go up pretty dramatically for cars.
here's a simple one. Why is my 401k dissolving?
Because you own some stocks. You own stock index funds. And, it's so weird when I get these questions about retirement because people will say to me, if you're younger, it's not a big deal. But what if I'm 65 and I'm really going to retire in 2 years?
That doesn't feel like not a big deal to me. I'm far from retirement age.
I get that. But I think that you have a different perspective. When you know you're going to be retiring within the next few years, it feels really scary. Yeah. It really does. And I think the mind shift is we want people to really think about retirement, not like just the day you retire. Like, I am retiring on April 15th. Goodbye. I'm done. No, my retirement period will probably last 20 or 30 years. So even if you're on the precipice of needing some of your money, I think that the good news is you can still be a long-term investor. So one of the things that's happened in the last couple of weeks is that we've all gotten this extraordinarily good lesson in risk. Because I guarantee you, the person who wrote that question, or you, on February 19th, would not be saying to me, I'm just so nervous that the market will drop. That was when the S&P 500 made a new all-time high. And what we want people to do is, as my dad was a trader, and one of his favorite sayings was, you have to become a seasoned investor. And I would say, well, Daddy, how do you become a seasoned investor? He goes, well, you see how your mother seasons a piece of meat. She whops it with a mallet. That's how you season, and that's how you become a seasoned investor.
That's tenderizing.
And he said to me, what happens is, as an investor, you have to get whacked over the head. You have to get whacked over the head a few times to learn how far you've gone. Are you taking too much risk? Is this something you cannot stomach going forward? I think it is well worth everybody's time to interrogate how you really felt over the last month. Because if you're honest with yourself, maybe you shouldn't be 100% in the stock index fund. Maybe you should have a little less risk. That's okay. But you can't cry on the way up to say, oh, I wish I were more in stocks, and then cry on the way down because I'm all in stocks.
But there's no way to avoid any kind of loss.
Well, listen.
It's just how much loss are you willing to tolerate?
Put it this way. You could be 100% in a money market account in your 401k. The problem is that won't keep up with inflation over time. And so the whole point of investing is to put a dollar to work so it works harder than the inflation rate. That is what all the game is. You want your money to grow faster than the inflation rate. So the problem with being an investor is it requires this very unnerving condition as a human being, uncertainty. And that you have to take in. You have to be willing to take that ride. When you buy your ticket to be an investor, when you put that money in that 401k, you're on the ride. I always have this very simplistic way of thinking about how you build your blocks of your investing. And you start and you say, I cover my big three. I've got my emergency reserve fund. I've got my 6 to 12 months of my living expenses. It's set aside. It's not invested. It's just safe. It's my safety net. I try so hard to whittle down any high interest debt, credit card debt, an expensive auto loan. Get rid of it. And the third is the gateway to begin investing is to open a retirement account, an IRA, a Roth IRA, use your workplace plan, a 401k, a 403b, and get methodical about that investing. One of the reasons why 401ks work so well is that they automatically pull your money out of your paycheck. So a funny thing happened on Friday. A lot of people got paid, and 10% of their money went into the stock market on Friday, a terrible day for markets. If you had gotten that money and then had to make the proactive decision, I'm going to now invest, you would have panicked. There would have been no way you would do that. So automate as much as you can. Be clear that the longer your time horizon, the more risk you could take. And you don't have to be a hero. You don't have to have all of your money make tons of money. If you are uncomfortable with risk, the antidote to that is to save more. Try to keep yourself in check. Don't make any brash moves. And remember that most of this is going to develop over many days, weeks, months, and years. And we will not know the end of the story yet. We are just in the beginning.
Okay, Mark, let's kind of come back into planet Earth right now. What are the big takeaways from these crazy volatile markets? Let's really break it down. I think my number one is always try not to act in the middle of a crazy market move unless it was a predetermined decision. In other words, unless it was money going into an IRA or a 401k, or it was money that you were planning to put into the market because you were dollar cost averaging. But try not to do anything else. What's your next one?
Honestly, that's really the only one for me is, when the blank is hitting the fan, try to resist the urge to sell everything and go to cash. And I know our listeners, they don't really look at this stuff as, like you were saying before, gamification. Our listeners are, serious do-it-yourselfers. They all have assets. They all have goals. They have money. They know they kind of have a good idea of what they're doing. But still, people get spooked. Just try to resist that urge because you just never know when there are these big falls. Usually, not long thereafter, there are these big jumps. And if you got out, you just missed that 10% jump basically in a single day. So just try to stay calm and stick to your game plan.
Absolutely. Now, there are also a lot of lessons to learn from volatile times because I think the more distance you have from deep losses, the distance between that will kind of tamp down your emotional ability or your ability to recognize how scary it can be. So what happens is We go through these horrible market losses where, by the way, the stock market lost a third of its value during COVID. Fast. Then we recovered. But you forgot about that, didn't you? And so for many people, you were maybe highly exposed to the stock market. And you may have been also said like, I don't want to have my emergency reserve fund. I want it in, I really want to buy NVIDIA. Or we've had people who come on the program and tell us about all the money they've made in a single stock. And I don't want to pay capital gains. And what I would say is the best practice is to apply these rules and be consistent. So if you are somebody who just went through this period of time and freaked out, then maybe you had too much money at risk. If you're the kind of person who said, I heard one of these crazy stories about like some guy who's like, well, I want to make sure my kid can go to private university. So I put it in his retirement money, his college savings money. I pulled it out of a 529 and I put it in crypto. Are you out of your mind?
I have no sympathy for somebody who makes such a move.
I mean, you got to be crazy. So use this moment to interrogate your own feelings. That is a very positive thing to do as we approach this period. Oh, and by the way, in my long history of trading, I could have almost predicted the day after that big rise because it was so funny, Mark. So before I did this special with Lindsay Ryder, I was on with Major Garrett, our wonderful correspondent from CBS News down in D.C. And he said, Jill, today was the biggest day since 2008. And it was the end of the interview. And I said, Major, I hate to be a buzzkill and end the interview on a down note, but it was a big up day in 2008. But the market actually went lower in 2009 than it ever was in 2008. We did not bottom in the market until we had another 6 months under our belts. So I don't think that this is all over. One day does not make a trend. So we're going to have to see what happens. The uncertainty that is swirling around the economy, swirling around investment markets, this is something that has not gotten resolved yet. When it gets resolved, things will settle down. But until then, keep your head on straight. Take a deep breath. If you feel like you need some help, come to us. Just go to our website, JillOnMoney.com, click the Contact Us button, write us a note. And if you'd like to join us live, check the box, especially if you're a new investor and this really freaked you out. Mark and I would be so happy to hold your hands. It's a much easier thing to do with you live than for us to calm you through reading your email. So come on the show with us. It's a lot of fun, I promise. You should also sign up for our free weekly newsletter right at JillOnMoney.com. You can subscribe to us on the Odyssey app or wherever you listen to your podcasts. Mark Talercio is the co-host, executive producer, and king of all things web. We drop our episodes on Saturdays and Sundays. Please leave us a rating and review wherever you listen. Try to put your hands metaphorically on someone's back. Change your work, change your wealth, change your life. Thanks for listening. We'll talk to you tomorrow.